All right. Good morning, live stream. Good morning, Bloom YouTube. Good morning, YouTube. Good morning, world. Today is September 3rd, Tuesday, September 3rd, currently 5:32 in the morning. Back for another one, back for another live trading session here today. Uh, Quentin Trades here, Quentin Gulliford, currently in Phoenix, Arizona right now. Uh, and yeah, first day back on the market this week. Haven't done much. Just going back to this most recent Sunday and yesterday. I've just done a little bit of observance of the DXY and observing XAU USD, so our gold and US dollar currency pair. I'm just observing those movements over the weekend, but outside that, haven't done too much on the technical or fundamental side over the weekend. Um, uh, my partner, my compadre, Marcus, and I've got a lot of really big things and some time-consuming things going on the back end. Of course, we make time for everything, but yeah, we're really trying to lay the groundwork, lay the foundation of how we want to distribute, our knowledge and how we want to educate, everybody in the community and get as much content out there structured as we can. Um, so yeah, so I'm currently trying to find, just the right balance between, all the business work, all the stuff we have to construct and do and organize and structure, and then trade every day. So yeah, it's a working process. Our whole thing is volume times time. Volume times time. We're certainly applying that to everything we're doing. Um, yeah, having a blast while doing it. I'm gonna go ahead and share my screen here, and let's start with some analysis. So I'll throw my trading view up here while I just get into some of my goals and intentions for this morning's call, for this specific trading session that I established when I woke up. So before I get into my um, whatever I'm doing for the day, back testing, research, executing live trades, um, I like to kind of have a 30-minute period where I'm just dusting off the cobwebs from the night, from my sleep. Last night didn't go to bed as early as I would have liked to. Usually I like to go to bed around 10. Wake up around 4:30, 4:45. Somewhere in that region. So that gets me, right around that 5 o'clock, 5:15 time period. I'm By that time I'm ready to go. I've woken up, brushed my teeth, but got some light in my eyes. Push-ups, jumping jacks, couple squats, optional, but just something to get you alert, so that you can then become focused. We can't become focused before we become alert. So yeah, just taking 15 to 30 minutes to wake yourself up. I know this may sound maybe obvious, maybe not, but I think that's highly beneficial. Um, and so part of that 30 minutes for me now is kind of establishing what my goals and intentions are for any given session, whether it's I'm executing live trades, whether I'm doing some fundamental analysis, whether I'm doing macro research, back testing. You said that already. But anytime I'm doing that, I'm gonna just label out, and not gonna do a crazy expensive list. I have 4 things written down here that I'd like to accomplish. Making it an easy target to accomplish over a 2 hour span, 2 to 3 hour span. Uh, and yeah, just laying out good goals for me to uh, good target areas, I should say. Key key what's the word I'm looking for? Just key points I want to touch on, get to, work through, understand. Yeah. As you can tell, the speech and the articulation also takes time to kind of wake itself up. So as you're bearing with me here, I'll rattle off just a couple of these. So my first goal here today is to be able to open and close positions on interactive brokers. I've recently switched brokerages over to interactive brokers for reasons I can get into a little bit later. But it's a new platform, expansive platform, complicated platform. If you're coming from something like you're just using your online broker to move your money through, and then you have your MT4 or MT5 or your trade locker. Interactive brokers is just a whole nother beast. So I'm kind of taking it one step at a time as I learn how to really utilize that platform. It won't take long, but there's just a couple of things I need to figure out how to do in order to be able to just start making trades. Like the very fundamental level, it's all I need it for. Um, and then, interactive brokers, it's just so many features, OCO orders, trailing stop loss orders, a lot of fantastic tools, that I'm really excited to learn about and get into as we continue on these live call sessions. So that's kind of goal number one. Not these aren't necessarily in chronological order. Um, then I also want to. This one's a little side note. I want to kind of figure out my sentiment in macro research workflow. Um, and then this kind of pertains to maybe things. I guess yeah. This is completely trading specific. I was thinking maybe this might be more on the business side of things. Um, But no, not at all. Not at all. I'm not thinking straight. But figure out my sentiment in macro research workflow. I kind of want to plan out just very specific times in my week to just do research blocks. Maybe be it one 30-minute block or two 30-minute blocks, equating to an hour at a time in my day. So I find, I'll get deep into my sentiment in macro research. Of course, anytime I'm on the call, anytime I'm in my trading sessions, that's what I'm doing in the background while I'm sitting on my hands waiting for positions, waiting for things to set up. That's what I'm doing. But outside of that, I think I can ramp it up a lot more and just have more structure. Maybe not ramp it up more. Maybe that's not giving myself enough credit because I do get into the research and I do figure my sentiment off the call, off my live trading sessions as well. But I just want to have more structure with it. Yeah, I want to have more structure. So I'm gonna kind of work through the rest of this week and kind of configure some blocks, some steady blocks, some research blocks in my week. But yeah, again, that one's just kind of a side note. Um, and then these last two things, and this kind of goes into sentiment and macro research. I want to figure the labor market, the current state of the labor market. And we have unemployment claims dropping tomorrow, I believe. Yeah, I might as well pull up just this economic calendar here. Let's see here today, September 3rd. Manufacturing services. I will touch on that as well. Manufacturing services. Dropping at 7 a.m. Pacific Standard Time. And then tomorrow, I thought it was tomorrow. Tomorrow we have trade balance. Trade balance. I might have to add that to the list. Might get into a little bit of trade balance. Yeah, and unemployment claims on Thursday. Unemployment claims in that trade balance. Again, I'm gonna write that down so I don't forget. Oh man. Anybody else when they wake up early? you're moving, then you'll have a big yawn, or you'll just sit there and think to yourself, just be like, damn, it's early. It's early. That's what that yawn about 10 seconds was. Yeah, it's early. It's early. I love it. I love it. Yeah, so I'm gonna throw trade balance on there. So unemployment claims and trade balance are the two things that kind of really apply to this week. The labor market is something I'm more curious about, and just understanding the current state of the labor market, given our just current state of the economy. Um, and I've heard some whispers, about the focus shift. This is based off of Fed Chair Powell's speech last week. Excuse me, not this past weekend, but the weekend before. Um, and he kind of got into the Federal Reserve's focus shift in focus from inflation to the labor market. I haven't had the opportunity to really kind of dig deep into that. And first, I want to just understand the current state of the labor market. So we'll look at some of the data there. But yeah, the labor market is something I'm curious about, kind of in the grand scheme of the economy. And then, of course, we're going to be looking at the live charts and go through do some analysis on our live chart here. So maybe that's the first step. Let's take care of that first. I've got about an hour, 40 minutes of work here on the live call. We have plenty of time to hunker down and get some really good work in. So I'm gonna start with establishing target areas on XAU USD, USD JPY, and then the DXY as well. So we'll start there, kind of establish some setups, first to always check back in on. Um, and then once we, probably spend 30 minutes there, we'll start to move into our our unemployment claims and our trade balance. During that time period, I'm going to start to figure out my workflow, my schedule for my sentiment and macro research. So I kind of do tackle those 2 points at once. Um, just those 3 points at once, 2 points in a side note. Then we'll finish off going deep into the labor market, understanding the current state of the labor market. I think that sounds like a pretty good plan. If any setup starts to present itself, that's when I'll kind of go into interactive brokers. I might share my trader's workstation. Um, Probably not, just because I have no clue how to use it yet, and I don't want to look like a doofus. So I might just articulate through me trying to do that, while I probably talk through a position and try and get a position in. But yeah, that'll kind of be the course of action for the next hour, 40 minutes. I'm gonna get myself up real quick. I'm gonna get a glass of water, and get a little snack, so I can just sit down and focus for the next probably three blocks, three 30-minute blocks. Whenever I say block, I like to work steady in 30-minute blocks. So 30 minutes of deep work, 30 minutes of no distractions at a time. Just stack those one after another. 5-minute break in between. And so we got about an hour, 40 minutes. That gives us good three really good blocks of work to get through. So I'll be right back. Then we'll continue on and get going on our itinerary. Beautiful. Beautiful. All right, let's do it. Let's get into it. Got a little bit of incense going. Got a glass of water. Yeah. Let's get into it. Let's see. What do you guys think? Should we start with XAU USD? Should we start with USD JPY and DXY? Let's see here. Let's start with the DXY because that'll kind of establish a basis, um, and then it'll kind of give us enhanced insight when we're looking at USD JPY and XAU USD. And so what I'm going to look for here is just target areas in the market in which I could see the market moving to. I'm actually going to get up my side-by-side screen. I feel like I have, yes. Oh my goodness, look at this. This is beautiful. This is gonna be a beautiful talking point. Just give me one sec while I observe this. So it's beautiful, man. It's beautiful. It's beautiful. All right, let's do it. Let's do it. This is really nice. This is gonna be really good for us to build our understanding of areas of inefficient price in the market, fair value gaps. Looking at that FVG, that stands for fair value gaps or gaps in price or inefficient price. And so if I use any of those terms, I'm going to be referring to the same things. Um, and so over the last 3 trading days, so going back to last Thursday, we've seen 2 areas of inefficient price successfully filled by the market. And so it's very, very, very important for us to understand that the market is only doing 3 things at any given time, and it's only looking for 2 things in terms of its target areas and areas it's going to move to. Those 2 things are part of the 3 things. So this is going to be really, really easy for us to understand. But I have to emphasize is how important this is for our understanding of the structure of the market, of the innate structure of the market, as we said. And so the market is only hunting for liquidity or inefficient price or fair value gaps. Liquidity or inefficient price. And the third thing is it will accumulate for safety. So those are the 3 things that we say that price is doing at any given time. It's either hunting for liquidity, sweeping liquidity, filling areas of inefficient price in the market, or accumulating for safety. That's a really simple way for us to kind of sort out what the market is doing at any given time. Um, and so as we look at these gray boxes here, this is how I mark up my areas of inefficient price. And so quick review, and I'll just kind of go over the structure real quick by looking at this area from 103.86 to 103.56. And so the gap in price is created by a grouping of 3 candles. And my mind works in really groups of three. So this is a concept that I think is easy for us to understand just as humans and how we like to, find order in really anything, systems in anything. And so these gaps in inefficient price occur between three things. So it starts with a grouping of three candles. So let's look at this white bullish candle here. And you see this long bearish candle, this black candle here, bearish candle. So these areas of inefficient price are always created by some major candle like this, right? Some major candle like this. So anytime we're looking for an area, let's just look for a big move, a big candle. Let's start there, which is exactly what we're doing here. So candle number one, this white bullish candle. Candle number two, large candle creating that gap in price. And then the third candle, I do quote unquote candle, because that third candle represents everything after this large candle. Everything after this large candle. And so the gap in price is created by this long bearish candle. And then now it's up to everything to come to fill up this area of inefficiency, to fill up this gap in price. And so you see everything past this large bearish candle, the highest it's got to is this bullish wick here. So it's filled the market, it's filled this given inefficiency up that much, but has still left a large area of inefficiency. Again, this is the major point when it comes to these areas of inefficient price or these fair value gaps. They will always be filled, no matter what. At some point in time, it can be a day, it can be a week, it can be maybe in a year. These areas of inefficient price will be filled, will be filled. So as you're doing your back testing, as you're trying to understand these inefficiencies in price for yourself, as you're looking past in the market, look for these big candles and watch everything that occurs after that candle fill up that gap in price. It's truly astonishing once you really get in there and see it for yourself, and once you start to really build your understanding of these areas, it's truly astonishing, truly astonishing. And so we look down here to the areas that have been filled. Again, going back to last Thursday, speaking to these two areas right here, from 101.08 to 100.94 and 101.84 to 101.6. You've seen these areas since get filled, right? So let's break it down a little bit more and kind of tie these areas into that one example area I showed you a second ago. So it starts with a grouping. We're looking for a grouping of three candles, three candles. So in this case, and here I'm talking about this bottom area. Bullish candle, gap in price created by a large bearish candle. And now it's up to everything after that candle to fill up that gap in price that's created by that large candle, by this large bearish candle. And what I'm going to do, I'm going to move down the time frame. So I'm on my daily time frame. I'm going to move down the time frame just so we can kind of see how would this area in price, how this gap in inefficiency was filled. I think this might be insightful for us. And it will be. I'm going to hide my cloud real quick just so we can get a really good view at this. I'm going to turn that cloud off real quick just so we can get a really good look I'm also going to turn my market sessions indicator off just to get a really clean look at price here. And so this is kind of an expanded view of what we were just looking at. Again, we were looking at the daily time frame a second ago. I moved down now to the 1 hour time frame to build understanding of how this area of inefficiency was um, filled up. And so here's the area here. Again, this area is from about 100.9, let's call this 100.92 to 101.1. Again, trying to use just easy numbers for us to understand. And so we see here, going back to last Wednesday, this is when the market started to fill up this area of inefficient price, moves up in the area. And when I'm thinking about this, I'm understanding that this is an area that the market is hunting for intentionally. The market is hunting. It's has to balance itself out. I think of the market as a system of equations, as a system, a computer system, a digital system. And just like any digital system, just like any computer system, the equation has to be balanced. The equation has to be balanced. Um, we have to be equal on both sides of the equal sign. That kind of ideology, that kind of thought process. And so we see here, going back to last Wednesday and through Thursday, we see that area of inefficiency get completely filled up. And so after it fills up this area, after it fills this area of inefficient price, that area is gone. It no longer exists. It is no longer an area of inefficient price. Bam. So I can go ahead and take this area off because it's been filled. I don't have to worry about that area anymore. And so we'll continue on to that next area, that second area that we're looking at. Again, I'll go back up to my daily time frames so we can see this again at the same view. Again, I deleted the area, this lower area here. So I can go ahead and get rid of that. And then again, I mentioned it filled two areas since last Thursday. And so now we're looking at this second area here from 101.84 to 101.63. Just look how accurate, look how precise this is. Again, I moved from my daily time frame back down to my 1 hour time frame. Excuse me. And so on our time frames, and this is something that everyone might know, might not know, but on the given time frames, the time frames change, represent. We find differences in the time frames by understanding that each on the 1 hour time frame, each candle represents a 1 hour of time. Or on the daily time frame, each individual candle represents 1 day of time. You can track that to every time frame. On the 1 minute chart, each candle represents 1 minute of time. So each minute there will be a new candle. So I just want to kind of emphasize that a bit here. But going back to this area, look at just how precise the fill up of this area is. Within 10, not even 10 pips of range here on that market fill up, on that inefficiency fill up. So again, understanding that these areas are areas that the market is hunting for. It's designed to fill these areas of inefficient price. But just look how precise and exact it is. That's the point here. That's the visual point here. It's just truly, again, it's truly astonishing once we kind of understand how these areas work, why they're important, and then just get the repetition of seeing it time after time after time after time. And so going over that, since those areas of inefficient price have been filled up, let's talk about target areas for the DXY now. These 2 areas have been filled up. They're no longer target areas. No longer target areas. So I'm going to go back to my daily time frame, and here's where I start my top-down analysis. Here's where I'll start. I'll move from my daily time frame down to my 4 hour time frame, down to my 1 hour time frame, and just kind of see what stories I can build, what setups I can kind of create by looking at those time frames, starting with my higher time frames and moving down to my lower time frames. Top-down analysis. My email was just buzzing crazy for a sec. UNLV. Next step is login. So, for those not aware, I've recently applied to dental school, applied to 14 different schools all around the country. And so, between now and probably December, I'll be just sitting on my hands waiting to hear back from schools. Hopefully to get some interviews and get accepted somewhere. So just got an email from UNLV, University of Las Vegas. They just gave me a user ID and password. Dope, cool. That's something I'll get into later on in my day. So yeah, let's look at some target areas here. Let's figure this out. And so we'll establish these target areas on our DXY, on our XAUUSD, and our JPY. And so once we establish the target areas, then we'll move to the macro. Then we'll move to what's likely going to happen with currency based on the macro, and then bring it all back together and understand which target areas are most likely to be targeted and filled up by the market based on the market and sentiment analysis, the macro and sentiment analysis that we gain from unemployment claims, trade balance, and then gaining our understanding of where the labor market's at. So again, I'm going to start on my daily time frame on my DXY. Slide that other screen over. And so I can go ahead and get rid of this area because again, where it got filled, we're looking at the 1 hour time frame and watch that area get filled with high precision. And so the next target area, probably obvious to us, just based on what we've seen, based on how I mark up my charts in these areas of inefficient price with these gray boxes. And you see another lovely gray area. You see another area of inefficient price at this 102.4 to 102 level. Again, let's build the understanding here of these areas and how we can see them. Think groupings of 3 candles. It starts with this bearish candle in this case, large candle. Bam. We get to candle number 3, which is everything after the candle that created the area of inefficient price. Everything right here. Calling the third candle. Everything after the candle that creates the area of inefficient price is the quote unquote third candle. And so you see, starting with this first candle, you see that gap created in price. And you've seen the market's inability so far to completely fill up that area of inefficient price. And so, especially if we kind of configure some more bullish news, some more bullish sentiment on the dollar, this will be the first target area that we'll look to see get filled up. And again, this is from 102 to 102.4. And again, with the understanding that these areas in price, they will be filled. In this game of trading, there's not many absolutes. There's really not many absolutes. It's so much on our analysis and our intuition and our decisiveness psychology, that'll kind of dictate, our involvement in the market. Um, but in a game, in an adventure that has very little absolutes, anytime we can find an absolute, it feels so good, and it's something we should hold on to with great care. And so these areas of inefficient price, or these fair value gaps, are an absolute in the fact that they will be filled up at some point. Will be, will be. And so again, this area from 102 to 102.4 will be a key target area for me on the bullish side with respect to where we are at currently in price on our DXY US dollar currency index. Big stretch, real quick. And so I want to be prepared, on both sides of the coin, and understand where the gaps in inefficiency price lie on both the bullish side with respect to where we're at currently in price, and the bearish side. Again, I want to be prepared for both. And so when I look to the bearish side with respect to where we're at in price, I see an area of inefficient price. I see one created between the last few days. And again, so we're gonna have to kind of work our perspective here. Um, and instead of looking at a bearish area of inefficient price, which that's all we've looked at so far, this here will be a bullish area of inefficient price, or an area of inefficient price that was created by bullish candles. And so again, same ideology, same concept. We're looking at a group of three candles. Three candles starts with this bullish candle here. And you have another candle. This is our second candle, the candle that creates the inefficiency. And then you have the quote unquote third candle, which is everything after that second candle, everything after the candle that creates the area of inefficient price. And so this third candle, that initial candle in the quote unquote third candle, had done a pretty good job kind of filling up the area of inefficient price that was created by our second candle, but it didn't quite get there. Didn't quite make it. And I never want to make the mistake of not being thorough. So even though this area is smaller with respect to some of the other areas we've seen, again, this is an area of inefficient price, and this will be filled by the market at some point. It will be hunted by the market. And so again, I don't want to make the mistake of not being thorough. So I'm going to go ahead and mark up that area. And again, can we see this area of inefficient price? I hope I'm making some sense of this for us. I'm gonna zoom in real close. Again, gap in price between that first candle and the third candle. Let's see how precise I can make this. Beautiful, beautiful. And so I want to just continue to build kind of some understanding of this concept. And so let's start here actually. Let's start here. I'm gonna start right here. I'm gonna start right here. And so let's look at the area of inefficient price created by this grouping of three candles. One candle. Here's our candle number two, which creates the area of inefficiency. Then you have the third candle, which again is everything after that second candle. Everything after. So again, this area has since been filled. I think we can see that. I think we can recognize that. But again, I'm just highlighting this to build our understanding of this concept. And so you see the area of inefficient price created. Price is going, and this is August 10th. And we see it filled on August 16th. So 6 days, right? I just want to make sure that's right. No, that's way wrong. That's way wrong. Not 6 days. So this is April. This is Wednesday, April 10th that the area is created. Then we see it filled up May 16th. So over a month's time. So about 34, 35 days worth of time. Again, these areas aren't filled all in a day, in a week. A lot of times they are. Sometimes they're filled within seconds. All right. But there's they these the point here is these areas will be filled at some point. I just want to hammer that in. They will be filled at some point. And we see that here. We see that again. We see the area of inefficiency price created by our candle number two. And we see price working price transpires over a month's time, gets to over a month, and it finally gets back down to that level that is created by our candle number one, and that area is since filled. So again, just one more visual for us to understand. So that's the area of inefficient price created. Let's zoom in real nice here. So again, I'm starting at the edge of this wick here on candle number one to candle number three, which represents everything after our candle number two, which creates the area of inefficient price. And so as we track this along, you see on this day, a lot of the area gets filled up. This day is May 3rd, Friday, May 3rd. And that's the edge of the wick, minimizing that area of inefficient price. Then we go forward another week or so, and then we see that area successfully filled up completely. Thus, no longer an area of inefficient price. And so I highly recommend just as you're doing your back testing, as you're really just observing the market, just look at these areas, look for these areas, and start to build your understanding of these areas, why they're important. Again, how we can just view them in the market, because they're just vitally important to our understanding of the structure of the market. And so now, so I'm still looking on the bearish side of price. I'm here. I'm going back to where we're currently at, and going back to looking for target areas with where we're currently at in respect to price. And so we have this bullish area kind of mapped out. We got that figured out. If it moves into that area, moves past that area, we can reevaluate. We can evaluate more on the bullish side. You can see there's other target areas I have on the bullish side, um, but I won't be too exhaustive right here, right now. I think having this area, this one sole area, is sufficient for right now. Again, so what are the three things that I said that the market does at any given time? The three things. It's looking to fill inefficient price, hunting liquidity, looking to sweep liquidity, or it's looking to accumulate for safety. And so again, our two target areas, I just said them. One, our inefficient price or our fair value gaps, and then liquidity, which we haven't quite touched on today. And liquidity lies at the highs and the lows in the market. That's the note for liquidity. Liquidity lies in the highs and the lows in the market. So one thing to hold on to for us as traders is we never want to be liquidity. You never want to be liquidity. It's not a fun situation to be in. Not a fun situation to be in. Again, these are concepts that we'll get into and expand on, as we move into our new platform, question mark, and as we continue on in our live calls. And so understanding that liquidity lies in the highs and the lows in the market, and tying that to our understanding that the market is hunting for areas of liquidity, it behooves us not to recognize where these areas are, and visualize these areas on our charts using some of our trading view tools. And since we're looking on the bearish side with respect to price, current price, we have one area of inefficient price marked up on the bearish side. But then, there's not another area of inefficient price for a while. For a while, I want to find a target area within this dead space, that I can kind of hold on to. So again, these areas are found in the highs and the lows in the market, right? And and then it's funny because look, liquidity. I guarantee you, if I scroll to the right, liquidity, there's a low right there. And you get into more lows. But look at this area right here, the specific area. Look at the liquidity that lies in here, man. So much liquidity at this level. You track this across. So much liquidity in this level. And so this area here, I'm gonna mark up as a liquidity point. And so liquidity will lie. You see right here, if you look in the middle of my screen, I have 1 day decision-making level. And so really these areas of liquidity are found in what we call decision-making levels. Decision-making levels. Because once the liquidity is swept, the market is going to have to make a decision. Right at that point, it'll usually accumulate for safety once it reaches a decision-making level. And then again, it's the market's decision whether to move bullish or move bearish with respect to price. And so again, I never want to make the mistake of not being thorough. And I want to be consistent. So mark that up as a 1 day DML, still on my 1 day time frame. And I want to represent the top end of this area. As I move down the time frames, especially when it comes to liquidity and establishing our DMLs, they get more accurate the lower you get on your time frames. So since I'm on my daily, I just kind of want to just establish these levels and then fine tune them as we continue down with our top-down analysis. And I'm really taking my time here on the DXY. Then as we move to our XAUUSD pair and our USD JPY pair, I'll move through those relatively quickly. I do want to make sure I get to that macro stuff as well. And so bam, there we have it. We have a nice bullish target and two bearish targets on our DXY US dollar currency index. Areas in price that we know price will move through. We know it will happen. Now at this point, it's on us to figure out where the momentum lies, where the volume is, understand the macro side of things, understand what's going on in the economy, that will impact price, that will impact currency, thus moving price to one of our target areas. Yeah, I'll just leave this here for us to view for a sec. Beautiful. Beautiful. And so I'm going to continue on with just the top-down analysis on my DXY. And this is where we just fine tune things, baby. This is where we get hyper accurate with things. And so this is why I have to annotate these areas of inefficient price and specifically talk about what time frames I got them on. Because if you look at this area here, this area of inefficient price, this gray box doesn't represent the area of inefficient price on this time frame, on this 4 hour time frame. You see there is still an area. Again, looking at grouping of three candles, looking at this white candle here, area of inefficient price created by this large candle. Then you see this third candle, so everything after second candle move. So what I'm going to do actually is, so if I'm looking at the 4 hour time frame, this area of inefficient price will be like this. And I hope that can make sense, just how we talked about our in, our structure of our inefficient price, um, and how to recognize these in the market. But again, they're just more valuable to us when we see them on the daily time frame, when we represent this area in price on the daily time frame, on the higher time frames. I just want to specify that. Because again, like you can look at this area and be like, oh, there's no area of inefficient price. There's no area of inefficient price. You see this white candle, the wicks right here. There's no inefficient price created. Yeah, initially on this bullish candle. Then you see our third candle. So everything after candle number two, get down to the level of candle number one, thus not leaving an area of inefficient price. But again, different time frames. We gotta annotate where we get these from. There is an area right here. I'm actually gonna mark that up. And I'm gonna mark that up because it really kind of builds off this area that I found on the daily time frame. Really a continuation of that. And I think that's important for me to have marked up on my chart. So I'm gonna go 4 hour. Everybody got another little area right here. And again, I never want to make the mistake of not being thorough. And so just kind of watch me as I go through this. Not going to speed through. I'm still going to talk through these as I mark them up. But I do want to get through this. Again, this is a really quick process, a really quick process. I'm trying to just really get into this concept just because of how important it is, for us to be successful and see these key target areas in the market. We still got a liquidity at our decision-making level there. I like the other decision-making level, liquidity level, that we planted there with our purple line. It's good. I think this is a really good, thorough DXY analysis. And so I'll go daily time frame, 4 hour time frame, 1 day time frame. And here, this is where the specific fine tuning on our decision making levels, on our liquidity levels comes into play. Just want to make sure everything looks accurate. And again, here on the 1 hour time frame, I'm more looking at these decision making levels. I'm making sure these levels are as accurate as they can be. Quick peek at the 15-minute. You just see as I go through these, is how these areas really make sense. How these levels really make sense for us. Beautiful. Beautiful. All right, let's get off the DXY and let's start to look at gold. Let's start to look at gold. And again, starting with our top-down analysis, we're starting with our daily time frame and progressing through our 4 hour, our 1 hour, and then our 15 minute. Again, I'm gonna start with looking for areas of inefficient price. See, I already have some in play. You see, they haven't been filled since I've marked up these areas. And again, I'm just gonna zoom in on these real quick so we can see these areas of inefficient price. Candle number one, and we have candle number two, which creates the area of inefficiency. And you see candle number three, quote unquote, talking about everything after this second candle, and you've seen the price's inability to come back and fill this gap in price created. And I wonder actually if I can do this. Bam. Can we see this blue line here? That's the gap in price that I'm referring to. That's the gap in price that I'm referring to. From wick to wick. From the edge of the wick of candle number one to the edge of the wick of the lowest candle in candle number three. Again, candle number three is the grouping of candles that comes after candle number two. Man, this is crazy how accurate this is. Look at this area here. Looking at this candle here, large white candle creates an area of inefficient price. You see as the days progress, you see this black bearish candle come down and fill this area completely almost with exact precision. Almost exact precision. You're speaking to just how important these areas are. Just how the market is hunting for these areas. It's looking to balance itself out always. And all the easiest place we can find these areas is on any large candles we see. Any large candles we see. So I see two areas of inefficient price right here, one after another. Again, that's far away from where we are currently with respect to price. So when we get down to the level, that'll be something I'll mark up as we move down there. Just for the cleanliness of my screen. I think we're pretty safe and accurate on the bearish side. And price is currently at, let's call it 224.90. You know, this the bottom of this level here is 23.38. So that is, yeah, I'm trying to count pips in my head. I believe it's around 23.90, around 1,600 pips. I believe I have that right. Yeah, because it's not, it wouldn't be 16,000. That doesn't make sense. Yeah, about 1,600 pips. That's a lot of movement. I mean, on gold, gold can do that really quickly, as you may know. But I think we're pretty safe as far as the areas of inefficient price go. Um, on our bear side. On the bullish side, shit, where this is the all-time high. There's nothing above here. There can't be any inefficient price. All this is liquidity. All this is liquidity line here, their all-time high. So I'll note that, and you'll notice my purple lines, my purple decision-making level lines here representing my liquidity, area of liquidity. Yeah, it's price is always interesting whenever we're at these all-time high levels. Because you just have to be prepared for anything. Like we could sweep through this liquidity and then what? Like it's really at that point it's on us to just understand what's going on in the market, understand the macro side of things, what's going on with our dollar, what's going on with gold. That's what'll allow us to make decisive and accurate decisions when we're pushing an all-time high and we move above creating new all-time highs. I just want to specify that as well. So I think we're looking pretty good here on our daily time frame on our XAU USD pair. Understand we have liquidity that lies above us, all-time high that lies above us, and then we have target areas of inefficient price lying down here on the bearish side of things. Again, I never want to make the mistake of not being thorough, so I am going to continue on and look at my time frames here. Ooh. I think I have found something closer for us to latch onto in terms of areas of inefficient price go. I see one right here. I'm going to extend that out. And again, can we recognize this area? Can we see how this area makes sense on this specific time frame? And candle number one, right here. Candle number two, which creates the inefficiency, is there. And then we have candle number three, which represents all the candles after number two. And you see this large candle here on Thursday, August 22nd, come down and fill up most of that inefficiency in price, but not quite. Doesn't quite get down to that level of the first candle, of candle number one, which leaves us a beautiful 4-hour fair value gap for us to mark up and for us to recognize as a target area for the market. Yeah, I like that just because it's closer than this area, just a closer target area. DML. Continue down to our 1-hour time frame. And this 1-hour time frame is where I really like to find these decision-making levels. They're just so fine-tuned at the 1-hour time frame. On the 1-hour time frame, excuse me. Okay. I think we're looking pretty good here on our XAU USD pair. Looking pretty prepared for the rest of this week. And so that's really my intention here. I'm looking to get prepared for not today, not this trading session specifically, but for the trading days to come. And I'll continue to build my sentiment. I'll continue to um, and what we'll do here in a sec, get into our macro research, figure out our sentiment, understand what's going on in terms of currency and what could impact currency and what's most likely going to happen with currency. Um, And doing that, that will allow us to understand which target areas will get hit, get filled, and when. That's the goal. That's how we tie everything together. So a quick peek down at the 15-minute time frame, but again, at this point, everything should look good. And I am actually going to mark up this decision making level here. 15-minute DML. And again, we can fine tune as we move down the time frames. I do want these levels to be as accurate as possible. And again, I think we have a fantastic markup here on our gold pair. Everything labeled. That's what I want to see. Let's do one more currency. I want to touch on USD JPY before we get into some of this macro. This is another currency pair that I trade heavily. So I've really been sticking to XAU USD and USD JPY. So let's look at this here. Let's look what we got on our hands. I'm gonna delete some of these areas. Some of these have since been filled, and I don't have them annotated. Anytime I don't have anything annotated, I go back to my chart. I'm gonna delete it and restart. Um, Again, I never want to make the mistake of being thorough. So if I see a point where I was not thorough, I'm going to go back and revise. So again, top-down analysis here on USD JPY. So switch currency pairs on us. Let's find some areas on the bullish side, target areas on the bullish side, then target areas on the bearish side as well. Starting with our areas of inefficient price. Again, I'm going to kind of move through this relatively quickly. Like that, that's not gray. So I like the DMLs I have here. And these DMLs representing where liquidity lies in the market, areas in the market where the market will make a decision at a given level. Yeah, there's really not much for us in terms of areas of inefficient price on the daily time frame. Uh, I see these two areas, and again, I'm thinking relatively close to where we're at in respect to price. You know, a range that could realistically be filled within the next week or so. So here, I think we look pretty good and taken care of on this daily time frame. Our USD JPY pair. Let's move down one. You still see these areas represented well as we move down the time frames. Again, so here I'm speaking about liquidity and our decision-making levels, knowing that knowing that liquidity lies at the highs and the lows in the market. You know, just getting an expanded view of this can really make sense for us, right? Just where I have all these levels, high, low, highs and lows in the market. s- some that I haven't marked up and annotated up here. Again, with where we're at with respect to price, I think we'll be okay for now. We'll move down to the 1 hour, and here again, I'm fine tuning, particularly these decision making levels. And yeah, I was looking at this level here if I wanted to mark that up. And I do, I want to. Ready. Beautiful. I think we have good markups here, guys. I think we have good markups. Money. All right, let's move on from this. We've spent enough time, kind of going through what areas of inefficiencies are, what liquidity is, and where both lie in the market. And that's kind of my intention, kind of moving through that. I moved a little bit slower than I would have liked to, uh, but these areas and understand these concepts are so important. And we call this the innate structure of the market, the innate structure of the market, how it's designed, how it's built, the innate structure. So let's get to this news here. Let's start to understand our economy, our crazy economy. What the heck is going on in the world? It's crazy right now. And today at 7, so in 12 minutes, actually, we have an impactful folder. This ISM manufacturing service, excuse me, ISM manufacturing PMI. I'm just going to expand this a little bit to get a gauge on what this is. It's the last couple times this photo's come out. It has released bullish or bad, excuse me, bearish or bad for currency. Released monthly on the first business day after the month ends. So I wonder, okay, so yesterday was a holiday, so not business day. It's leading indicator of economic health. Businesses react quickly to market conditions, and the purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Survey of over 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. Yeah, and this what makes particularly trading Forex is so interesting, and so full of potential, right? Just because anything that impacts the economy impacts currency. And anything that impacts currency will cause a currency pair to move. So all this stuff we see, and going from cash earnings to jobs to trade balance to employment, unemployment, to holidays to commodity prices, all this stuff we see here has the ability to impact currency. And since it impacts currency, here I'm looking at the USD folder, so it impacts currency, meaning the US dollar. Since it impacts the US dollar, it will cause any US dollar involving currency pairs that we can trade to move. And anytime these currency pairs move, we can execute trades and be profitable. This is a over $7 trillion market that we're working with, and it makes sense once we understand just all the different players in this market. So when 7 o'clock hits, we'll turn back to the charts and see how this folder might impact price right away and kind of gauge some insight or awareness to how it could impact price as we continue on in the week. I'm gonna leave that ISM manufacturing PMI there for a sec because I want to move down to this trade balance. And so trade balance, on this website, Forex Factory, I'm really paying attention to the red and the orange US dollar folders. That's what I'm looking for. That's what I'm focusing on. But the one yellow folder that we have to pay attention to is trade balance. It's trade balance. And there's another news website that I'll get to this my FX book that I'm kind of starting to like more than Forex Factory just because it's a little bit more expansive. I just don't like all the ads on the side and shit. The ads annoy me. Forex Factory is just super clean. That's really the only reason. But this trade balance will be really important when it releases tomorrow. Trade balance days are always very, very interesting days to trade because a lot of manipulation happens on trade balance days. It's released by the Bureau of Economic Analysis, and it measures the difference in value between imported and exported goods and services during the reported month. I'm going to read that again. It measures the difference in value between imports and exports for goods and services during the reported month. There's a lot of goods and services being imported and exported in the United States. Last month, 72.5 billion, 73.1 billion, 75.1 billion. That's a lot. It's a lot of good. It's a lot of imports and exports. But we understand that. We understand the United States involvement in import and export. And so you quickly realize how this being a yellow folder, it's not a yellow folder, not a yellow folder. So this data will release on Wednesday, so tomorrow, and that'll be again very interesting for us to pay attention to. Forex Factory notes the goods portion has a muted impact because it's a duplicate of the goods trade balance data released about 5 days earlier. So we had good trade balance last week, and now we have trade balance. The positive number indicates that more goods and services were exported than imported. Why traders care? Export demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices at domestic manufacturers. So let's think about that for a sec. Again, speaking to this $7 trillion industry that we're playing around with here. And I love these Forex Factory notes and in the why traders care section. I'm gonna read this again. Export demand and currency demand are directly linked because foreigners, and let's not think of foreigners as a trader from Europe, a trader from Japan, a singular entity. Think of foreigners as foreign governments, as foreign federal banks. So kind of expand our perspective when it comes to foreigners. Export demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demands also impact production and price at domestic manufacturers. For the federal banks, for governments, for large institutions, hedge funds, going down to us as retail traders, we data like this, trade balance, goods and exports, it will impact currency. And again, because it will impact currency, it will move our currency pairs. And when our currency pairs move, we profit. Good trade balance. I'm going to actually expand this out in a new tab. I'll get to that in a sec. Another red folder on Wednesday, JOLTS jobs openings. Number of job openings reported during the last month. Actual forecast released but can impact the market because job openings are a leading indicator of overall employment. Here again, I wanted to get into the unemployment. This folder, this JOLTS job openings releasing tomorrow, kind of touches on the employment aspect of things in the economy. Why traders care, job creation is an important leading indicator of consumer spending. As Ray Diallo says, one person's spending is another person's income, which accounts for a majority of overall economic activity. So people are making more and people are spending more. We know that, governments know that, the economy knows that more than anybody because the economy is designed according to human nature. The economic cycles that we go on are understood based on understanding human nature. Understanding again that one person's spending is another person's income. The more you make, the more you spend. So thus, on the inverse side, if there's more unemployment, people are spending less money. People are spending less money. What does that mean? That somebody's earning less money, right? We can kind of make sense of that little simple construction of the economy. And so you quickly see, just how the long term and the short term debt cycles happen and occur and transpire. And this is something that I'm currently researching and looking to be able to articulate very, very clearly and precisely. I'm about 60% of the way there. So, I'm working through this and what I held on to and grasped up to this moment. So I appreciate you kind of bearing with me and believing in our development here on the Bloom side of things. And this is what I really wanted to get to from the Department of Labor, unemployment claims releasing on Thursday. Again, I'll note that we have about a minute and a half until our red folder drops this morning. But unemployment claims, let's break this down a little bit. Let's read through this. Unemployment claims measures the number of individuals who filed for unemployment insurance for the first time during the past week. That's an important for the data right there. Filed for unemployment insurance for the first time. Released weekly, usually on the first Thursday after the week ends. Forex Factory notes, this is the nation's earliest economic data. The market impact fluctuates from week to week. There tends to be more focus on the release when traders need to diagnose recent developments or when the reading is at extremes. And this is something that we track every week. Every week we will have unemployment data come in that will impact the market, that will impact currency. Why traders care? Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy. Fed Chair Powell. And this speaks to his and the Federal Reserve's kind of shift in focus from inflation to employment in the labor market. So I'm gonna go to the chart. Let's watch this. Let's watch this news. Let's watch this news drop. Watch my DXY. Let's watch how this impacts currency, if it does at all. Here's sitting on my 15 time frame. I'm gonna move down to my 5. I'm gonna get a nice refined view of potentially some of the volatility that comes from this news. And again, this is our PMI, our ISM manufacturing PMI. Let's see how the data released essentially spot on. Essentially spot on for the ISM manufacturing PMI. ISM manufacturing prices released bullish are good for currency. Not quite as impactful, thus being an orange folder, not a red. I mean, so if we get a red or a green reading here, green meaning it was good for currency. Good for currency would mean our currency the US dollar move upwards, move bullish. If it was a bad reading for currency, if it was red, that would represent bad for currency or currency moving downwards. So as you see these progress, you see there's the constant, balance between, good for currency, bad for currency, neutral for currency. Like this 47.2 number was close enough to the forecast that it was basically what they expected. But this ISM manufacturing prices did drop good for currency, and you see that reflected in price with this good for currency candle or this bullish candle. And so again, we'll see how this transpires over the course of the next hour or so, or here in this case, in terms of the call, next 30 minutes. And we'll see if this bullish news is enough to, create some significant movement, continued movement in price. And what I really look for here, and again, I just have to pause every now and then just to kind of, not collect my thoughts, but just analyze. It's hard to analyze when I'm talking, when I'm running my mouth. What I'm doing here is, what I try and do, how I kind of view this and sort out this news is I look for news folders that I can categorize. So I look for stuff that will speak on, let's call it the real estate market. So um, construction spending like this right here, any real estate like that. Then you have our bonds, which are really important, much more important. The more I learn about these government bonds, very, very fascinating. I can't speak on that intelligently quite yet. That's on their pay attention to. Then I'll focus on, inflation data and then unemployment data or employment data. So I'm trying to categorize all these different things you see within just a few different bins. And then, just look at those bins individually. So instead of looking at 25 different news folders, I'm really looking at, four or five different things and all these different folders that can kind of sort into one of those bins. And so as I'm looking to see how, say, unemployment or employment is going to impact the market, I'm going to look at anything that has to do with employment and kind of gauge in its entirety how the current state of the labor market will impact currency. I hope I can make some sense of that. So as we move, we've got 25 minutes left on the call this morning. I'm gonna run to the bathroom, do a quick bathroom break. I'll be back in 2 minutes. And then what will we continue on to? I'm gonna get into the labor market. I'm gonna finish off with 20 minutes, just looking at the labor market. I'll probably use some chat GPT. I'm just kind of gauge some superficial insight on the current state of the labor market. I'll be right back. Oh, all right, let's finish this off here. Again, about 20 minutes left in this call. And I want to get into the labor market. The labor market. So today I've touched on we went through our DXY, our XAUUSD pair, and our USD JPY currency pair, and did a complete markup on those areas. I'll provide screenshots and just displays of my markups and put them in the sentiment channel in our Discord. Um, so for those that missed the early parts in the call this morning, we'll be able to see where I marked up my chart and see those target areas in the market. So went through that, spent about an hour on that, then went through the news, touched on unemployment claims, looked through the trade balance, um, and we certainly have some impactful things in the market this week. I want to see. So there's bullish reading from our ISM manufacturing prices, orange folder. You see that immediate candle that came in, that immediate bullish candle that came in, kind of get just kind of swept away right away. So again, we'll see as the news kind of stacks up over the week, um, how the folders from today and tomorrow and Thursday will impact currency, of course. But what I really want to get into, and this is what I've been fascinated with today over the last couple of days, is the labor market. And so it was 2 weeks ago, not this Labor Day weekend, but the weekend before, Fed Chair Powell had a speech, and his speeches are always vaguely insightful, if I could use a term. He says a lot of things without saying things. But one of the large sentiments that we were able to gain from Fed Chair Powell's speech is the Federal Reserve's kind of focus shift, the shift in focus from inflation data to the labor market. And so that's what I want to build insight on today, right now. Uh, Again, ChatGPT, our AI language models, are a fantastic resource for us to do information excavating like this. And so let's see. Let me think of what I want to tell ChatGPT. So I'm gonna go back to this last response. And so the Federal Reserve, I don't want to call them king, but the Federal Reserve is what impacts, influences, and controls the movement of money in our country. The government, they do all the policy things, and they ideally work to put money in the hands of the people or establish foreign relations, things like that. But the Fed, through impacting interest rates, and printing money, controls the cash, controls the money flow, the money available in the market in the country. So does somebody like the Fed Chair Powell, essentially the leader of the Federal Reserve, what he has to say is highly insightful when it comes to us building our own sentiment. Is understanding what the Fed is going to do. That's our best insight into what the economy is doing, the intentions of the economy, the trajectory of the economy. If it has to be fixed, what's going to be done to fix it. And again, we've seen the shift in focus kind of move from inflation data to unemployment. Let's read through this here. This was a couple of days ago that initiated this research. Excuse me, a little bit of hiccups. We started this research a couple of days ago, and here getting back into it. At the Jackson Hole Symposium, and again, this was um, over a week ago now. Fed Chair at the Jackson Hole Symposium, Fed Chair Powell Jerome Powell, Fed Chair Federal Reserve Chair Jerome Powell delivered a speech that was closely watched by markets and economists. The key points from his address revolved around the current state and future trajectory of U.S. monetary policy, which I was just touching on there a bit. Powell acknowledged the Fed's progress in controlling inflation, but emphasized that risks remain, particularly related to the labor market. He pointed out that while inflation has shown signs of easing, the labor market's resilience continues to be a double-edged sword, contributing to economic strength, but also posing risks of inflationary pressure. Powell stopped short of committing to a specific course of action regarding interest rate cuts. And so we're looking, fuck, I'm trying to think of the date in September, but there's a date, um, a meeting that's going to take place this month in September. I believe it's on the back half of September. I'll have that date for us. Uh, yeah, I think this is going to get into it actually. Um, Fed Chair Powell stopped short of committing to a specific course of action regarding interest rate cuts. However, he hinted that the Fed is prepared to act if labor market conditions deteriorate significantly. The market is already expecting a rate cut in September, with most analysts predicting a 25 basis point reduction. However, the exact size and pace of future cuts remain uncertain, with Powell likely waiting on more economic data before making a definite move. Overall, Powell's message was one of cautious optimism, balancing the Fed's dual mandate of controlling inflation while maintaining employment. He suggested the Fed would continue to monitor economic indicators closely and would remain data dependent in its decision-making process. So when I think, the cautious optimism, think I can't help but to recognize, the fact that we're in an election year in November. There will be a new person leading the country in the Oval Office, and so more getting more data, especially right now, is vitally important, just because you never know what's going to happen. What's going to happen. And so he's cautiously optimistic. The Fed doesn't work for the government. The Federal Reserve is its own entity that works with the government at times. But the government's, they're doing their thing to kind of figure out what the Fed's going to do as well. So I just expanded one of these articles that ChatGPT gave me. Just reading through this a bit. Expand another one here. And just to put names to faces, I think his picture will pop up here in a sec. Like for the longest time, I knew of Fed Chair Powell. Like I knew who he was, what he did. But I didn't see his face. Um, yeah, I took the picture away. God damn it! I think we saw it in the last website. Just comes with like the first market. So particularly because of the shift in focus of the Fed from inflation data to the labor market, when I'm going through my news analysis and my macro analysis, I'm going to place key priority on anything that has to do with employment or unemployment, just naturally. just naturally. That's a focus of the Fed. I want to be aware of, what they're focusing on simply. I'm gonna put into this little prompt. Pretend you are the best investment banker at a leading investment firm. That's something I like to say in a lot of my prompts, whatever it is. If I'm doing some sort of biological research, I'd say pretend you are a world-renowned research scientist. Bam, and then I ask the question: what is the current state of the labor market? Tie the labor market to its ability to impact the value of the U.S. dollar. And I like this little nugget. Explain the information to me as if I was a high schooler. And there's some where I'll do explain it to me like I'm a fourth grader, just depending on the concept. But these large language models, ChatGPT, it's a very, very useful resource. Just because you can type in something like that and it just gives it to you laid out and articulated to you in a way you can understand. Of course, it's on us to kind of prompt it accordingly. But I think we get better at just establishing these prompts, and writing these prompts. It's the more comfortable as we get with it. Labor market, the current state of the labor market in the U.S. is pretty strong. I mean, there are a lot of open jobs, a lot of job openings, and many people are employed. However, there are some complexities, such as slight increases in the unemployment rate, or concerns about whether this strength can last. The labor market is a big deal because it tells us how healthy the economy is. When more people are working, they have money to spend on things like food, clothes, cars, and houses. This spending helps businesses grow and makes the economy stronger. Again, the one sentence from Ray Diallo, is a really famous, highly successful investment banker, that I've been listening to, watching some of his stuff on YouTube. He says, one person's spending is another person's income. And when you think about that sentence, one person's spending is another person's income. You know, uh, it'd be naive for us to think, to have the perspective, say my income is one other person's, my spending, my individual spending is one other person's income. It's like one other person's making what I'm spending. That's not the case. It's speaking to when he says one person's spending is another person's income, that another person's income, could be everything we spend our money on. Every dollar we spend is a dollar that somebody earns. I think about this when I'm working, when I'm at the bar. It's because when we get done with our shifts, when we get done with the close in particular, we have we sort out all the tips that we get. At the end of the night, you just see, just the money laying there. Usually it's a pot of anywhere between 900 and 1,300 for the night in cash. We sort out the money, but I can't help but think and understand that like all these dollars that are sitting here sorted on the table, each one of these dollars is a dollar that somebody else made that I am now earning, that me and my coworkers are now earning. And so this part here, the labor market is a big deal because it tells us how healthy the economy is. When more people are working, they have more money to spend, which means more people are earning. So manufacturers of food and clothes, retail, cars, houses, people selling that stuff are making more money if people are making more money. This helps businesses grow and makes the economy stronger. So now let's talk about the labor market. It's like the US dollar value. The US dollar is like any other good. You can think of it as something that can go up or down in price depending on various factors, including spending when the labor market is strong, basically more money circulating the economy. When people spend more, businesses do well and the overall economy grows. A strong economy usually makes the US dollar more valuable because investors around the world want to invest in US businesses and they need US dollars to do that. Okay, so that's interesting. Okay, I want to get to this and tie it together. Interest rates. A strong labor market can lead to higher interest rates. Here's how it goes. When lots of people are working, there's more spending, which can lead to higher prices, inflation. To keep inflation in check, the Federal Reserve, just like the US Central Bank, might raise interest rates. Again, this is where we're at right now. To keep inflation in check, the Federal Reserve might raise interest rates. Higher interest rates can make US investments more attractive to international investors, increasing demand of the US dollar and therefore its value. Global confidence. Other countries see that the US has a strong labor market. They may believe the US economy is stable and growing. This can increase global confidence in the US dollar, which boosts its value even more. A simple example, think of the US economy like a big shopping mall. If lots of people have jobs, they have money to shop, and the mall is buzzing with activity. This makes the mall a popular place to invest in, which in our case means the US dollar is strong. But if the mall or the economy starts to empty out because people lose their jobs and stop shopping, investors may lose confidence and the value of the US dollar could drop. So the strength of the labor market plays a big role in determining how valuable the US dollar is, both in the US and around the world. That's interesting. And so certainly we've seen it mentioned the current strength of our labor market, our labor market being particularly strong right now, relatively strong, which has led to high interest rates. And now we're at a point where, we are in an inflated market. And of course, we all feel that. That's, the ground level. Uh, that we feel that certainly, just trying to buy goods and services, everything's more expensive. Gas, food, groceries, everything's expensive. So now we're at a place where the Fed can start to think about cutting rates. And we're obviously at that point with the rate cuts, inevitably happening at some point, moving through September, then November, and then moving into the new year. But it's the foreign investment that I'm particularly just fascinated about and how just money moves from, really country to country. That's where, government bonds really come into play. But again, these are things that I'm continually building understanding of. Just when it comes to just the macro side of things, macroeconomics, and building just really strong sentiment. There's so much data, there's so much information out there, and there's really just it's a thousand piece puzzle. It's a thousand piece puzzle that truly just takes time to piece together. I mentioned earlier on this call, I feel like I'm about 60% done with putting this puzzle together. I got about 600 pieces put together. I probably have, all my corners of my puzzle done, all my corners done, and kind of built out, probably two corners. Just thinking of, me putting together an actual puzzle. But I'd say I'm about 60% there. I'd be interested to see what where Marcus would put himself on that gauge. Again, in just if I lost my train of thought there, I was getting caught. Um, but that's why I love this prompt here in adding this. Explain the information to me as if I was a high schooler. Explain the information to me as if I was a fourth grader. Explain the information to me as if I was a toddler. And using these chat GBT models, these AI models, just to gain understanding and just continue to see the same things over and over and over again. Through our development, we'll obviously figure out which where we're currently doing how to best display this information in a clear and articulate way, in a platform that's really easy for us to understand, manage, and work through. November 1st is our big day, our big day. Um, put the little nugget out there. November 1st, we are releasing our biggest, I don't want to call it a thing. I don't think that does it justice, but we're releasing just our most profound development yet. Being a year in, a year into, what we're doing. November 1st, that's the day we can look at, where we have the foundation, we have the structure to continue on and do everything exactly how we want to get done. Again, hopefully by that point, not hopefully, that 60%, that my 1,000 piece puzzle, it might not have 1,000 pieces put together, but shoot, I want to have, 900, 920, 950. I want to have the puzzle pretty much there. Um, and we'll get there. We'll get there. We're right there. But as we said, 7:30, 7:31. Man, we got through a lot of good stuff today. Doing a lot of preparation as far as, excuse me, as far as the next couple weeks go. Again, I've recently changed brokers to Interactive Brokers, which is, the broker to go to living in the States. Just highly regulated, highly credible. And it's truly the best broker you can have that's regulated in the States. Um, so yeah, I'll be excited to work through some of that stuff tomorrow. I'm not closing bar tonight. I do work, but I won't be working too late. So I'll be on tomorrow. I would like to get into my interactive broker platform and kind of go through some of that stuff because it's really nuanced. It's new for me as well. I definitely want to get comfortable with using it before I start pushing a bunch of money through it. So I appreciate everybody who's been on the call today on the YouTube stream. I wasn't good with the YouTube today, peeking at the YouTube, but uh, again, continue to get better, continue to refine. But I appreciate you guys. I will see everybody tomorrow. Again, look out in our Discord. We'll have some stuff, some nice juicy stuff to release to you guys later today. I appreciate you guys. I'll see you guys tomorrow, same time, same place. Um, the YouTube, I'll just say real quick, the YouTube stream, we're starting at 5:30. Um, the call will continue to start at 5 our time. Um, so that gives us, that 30 minutes to, just kind of get everybody woken up, get us organized, get us situated, and kind of see how we set things up. And at 5:30, that's, the point at which we push hard through the session. So again, I appreciate everybody for being with me today, and I'll see all you guys tomorrow.